Hi, everyone. Thanks for visiting stockmarketjobber.com's YouTube page. My name is Mark. I'm the stock market jobber, and I like to teach people about trading and how Wall Street really works. And I'm in a good position to do this. I spent 20 or 25 years, I don't even remember, in the institutional trading world. I was the head of trading at three different institutional money managers where I oversaw the trading of various strategies, various hedge funds. I spent time as a market maker, about 2 years as a market maker. Um, I understand how hedge funds work because I actually traded for Mario Gabelli and Steve Cohen, who are two of the best money managers in history. So at this point in my life, I want to like quote unquote give back and just kind of teach people. And hopefully you'll subscribe for our YouTube page here, and you will check out our website, stockmarketjobber.com. But I want to talk today, or actually, I want to talk every day about the market because I'm like a market fanatic. But anyway, I just want to talk about SPY, right? The S&P 500 here. It's moving higher. There's a good chance it's going to run into resistance around 410. Now, why is that? Well, in the market, some levels are more important than others, and it doesn't matter what market it is. It could be the commodities market, the stock market, the crypto market. For some reason, and a lot of times we don't know, certain levels just become more important than other levels. Now look at this. This is the 410 level. It's not 409. It's not 411. It's 410. It ran into SPY ran into resistance there, 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 and I'm talking about to within a point. And this is a $410 security, and it's within a point. So that's a really small percentage. And if we keep going higher, there's a good chance we're going to run into it again. Levels can retain their importance for a while, and this is what we call market memory. If you've ever heard the term market memory, this is what people are referring to. Some price levels that are important can retain their importance for a long time. It could be months, it could even be years, and we'll see that. In this case, it's about a year. So the S&P 500, or SPY, found support here, then it became resistance. This is buyer's remorse. When you look at it, most technical analysts actually suck, okay? I'm just going to put it right out there. They don't know what they're doing. They try to look, they look for little, what they think is a pattern, and they try to draw a conclusion. But if you come to this stockmarketjobber.com, I'm going to teach you how the markets really work and how institutional traders really look at things. Now, why would a level that was support become resistance? Well, this happens because of buyer's remorse. When you look at a chart, you have to look at it through the prism of what does it tell us about support and resistance? What does it tell? I'm sorry, I said that wrong. What does it tell us about supply and demand? Because a chart is just supply and demand and market psychology. If there's not enough supply to fulfill all of the demands, well, the buyers are forced to pay higher prices and the market moves higher. If there's not enough demand to absorb all of the supply, sellers have to offer things out at a discount and the market moves lower. When we get to these important levels, there's a good chance things change. So support becomes resistance because remorseful buyers are placing sell orders at their buy level so they can get out of their losing position and break even. Resistance becomes support because investors who sold, who regret doing so, decide to buy their shares back, but only if they can get them at the same price they sold them for. So remorseful sellers placing buy orders converts resistance into support. And we could see the same phenomena happen here, resistance, support. But anyway, I just want to talk about this 410 level because there's a good chance that there's going to be resistance there, right? There's a good chance that now buyers are trying to buy and there's just not enough shares out there to fulfill all their orders, so they got to pay higher. When we get to 410, that could change and the market could start to trend lower. I mean, we don't know if it's a guarantee. Well, actually, we know it's not a guarantee, but we just think it's a good chance that that's what's going to happen. Market memory is when a level can retain its importance for a long time. So I know we're talking about SPY, but I just want to show you a couple examples of market memory that you can use to amaze and astonish your friends. Yeah, you like that? That's the origami bird, right? All right, look at CVS here, okay? In in August of 2015, right? Do you remember where you are at that time? I know. I was probably right here, but regardless, look at this. 7 years later, the market finds resistance at the same level. This is an example of market memory. CVS had resistance around 83 for 2.5 years, from late 2016 to 2019. Support around 52 retained its importance for a year. Now we can see here, I don't have the price level written here, but it's around 88. It was resistance and it was support. So this level has been important for about 2 years. So this chart of CVS shows a common market principle that we have this market memory. A level that's important can retain its importance for a long time. Now I'm going to completely amaze you. Amaze and Daze and Mystify. Let me know if you know what song that came from. Amaze and Dazed and Mystify. Um, Bristol Myers Squibb. This is a 25-year long chart, 2.5 decades. In October of 1999, it slammed into resistance around 74. 17 years later, the same level became resistance. So this is just one of those things. Academics don't understand it. TV commentators don't understand it. But as traders, we understand that we need to locate the important levels. Knowing where the important levels are on a chart is like having a map. Okay, if you went into a town you were never in before and you didn't have a GPS and you didn't have a map, you wouldn't know where to go. Probably you'd probably get lost. Well, if you don't know where the important levels are in whatever stock or market you're trading, you're probably going to get lost. So please join our community. Subscribe to stockmarketjobber.com. These are the types of things we talk about. If you want to learn how the stock market and trading really works from someone who is actually literally in the hedge fund industry. I mean, like people that are like, oh, I was a hedge fund guy this, I was a hedge fund person that. It's so ubiquitous, but a lot of them are just kind of, fluffing up their resumes there. But I can guarantee you I was actually in the literal institutional trading world. As a market maker. Um, and I will tell you this is what institutional traders look at, is what are the important levels. All right, everybody. Well, thank you for checking this out. Please check out our website. Please subscribe to our YouTube page, and I will talk to you soon. Thanks, everyone.